Is silver a hedge against inflation? Well, many investors turn to precious metals, such as silver, during times of high inflation. In fact, some believe silver is an even better inflation hedge than gold or real estate. That's because silver has a limited supply, strong industrial demand, and a track record of doing well during inflationary and recessionary times. But to really understand why silver is an inflation hedge, we should probably first answer the question, just what is an inflation hedge? Simply put, an inflation hedge is when someone makes an investment with the goal of protecting themselves against the decreased purchasing power they experience during times of inflation. You see, when inflation is high, money loses value as it costs more and more to buy goods and services. In this scenario, it makes sense that investors would rather limit their exposure to a currency that is plummeting in value. Holding your excess cash in a savings account earning a minuscule amount of interest simply won't earn you enough to compensate for the ravages of inflation. Ideally, people would like to invest in an asset with a value that will either keep up with or exceed the pace of inflation. And that's where silver comes in. Some experts say silver has a lot going for it in terms of being an inflation hedge. Let's look at 5 reasons why silver is touted as an inflation hedge. Number 1, silver's track record. In the past, the price of silver has gone up during inflation and economic turmoil. For example, in the 1970s, the United States suffered through years of high inflation. At the beginning of the decade, silver traded for around $2 an ounce. As inflation climbed, the price of silver exploded, topping out at around $50 an ounce by early 1980. And in the aftermath of the global financial crisis, silver zoomed up from $10 an ounce in 2008 to around $47 an ounce in 2011. Of course, there's no guarantee that silver will reach such a lofty trajectory again in the future. Just because silver's price accelerated in the past doesn't mean another spate of bad economic news will cause a price increase. But it is food for thought. Number 2, silver has a strong industrial demand. Another benefit of silver is that it's valuable for its many uses in industry. It's used in cars, electronics, solar technology, and medicine. The demand for silver goes beyond its perceived value as a haven during tough times. It has a practical and indispensable use in manufacturing and industry. Number 3, silver has a limited supply. At some point, silver miners will exhaust the amount of silver they can mine. The planet only has so much silver. It takes time, money, and significant effort to locate and mine deposits. Combine this scarce supply and high industrial demand, and you could see silver outperform other assets. Number 4, silver is tangible. Some investors like that silver is a physical asset they can own in the form of bullion, coins, and bars. Some fans of silver like the experience of seeing and holding their investment. Now, if you prefer not to own physical silver, you could also invest in silver exchange traded funds, ETFs, stocks in silver mining companies, or mutual funds that have portfolios of miners. But given that so many investments are digital these days, the fact that you could own physical silver makes it a unique investing experience. Number 5, silver's lower price point. Compared to the price of gold and some other precious metals, silver is, as of this recording, much cheaper. This means it can be a more accessible investment for someone just getting started building their portfolio. It's more affordable per ounce and could be a better choice for the small retail investor with a limited budget. So, are you planning on buying silver as a hedge against inflation? We'd love to hear your thoughts and encourage you to leave a comment below. And if you like this video, please let us know by tapping that like button. Thanks for watching, and we'll see you in the next video.